This is Alan Bush with the Daily Financial Forecast for Tuesday, December 6th. Starting out with the stock index futures, we are seeing prices holding up very well, even though we did have some bearish news in the form of crude oil prices trading substantially lower. Also, we did have some economic reports today that were, for the most part, a little bit better than expected, at least on balance. Longer term, we do feel that the main trend is higher. This should continue through this year and also well into next year. Also moving now to the currency markets, seeing the dollar index advancing. Better than expected economic reports, somewhat supportive, but the most important influence on the dollar index is the interest rate differential, which continues to be very supportive, taking the dollar index substantially higher this year. And I think this is a situation that is unlikely to change. So look for continued gains in the dollar index. Also, with the European Union likely to extend its bond buying program in light of the no vote in Italy's referendum on Sunday, the euro currency is under some pressure today. Also, we are seeing the pound holding up very well now for the fourth day in a row, advancing on improved feelings that the UK will strike some type of trade deal with the European Union and the Australian dollar lower. This after the Reserve Bank of Australia at their policy meeting indicating that the Australian economy could come under a little pressure over the very near term. Moving over to the interest rate futures markets, steady up front, lower at the back end, the 30-year bonds under some pressure, even though the energy prices, as we mentioned earlier, under some pressure. That would normally be a very bullish factor for the bonds, and yet bonds are lower. So clearly bonds are ignoring some bullish news, which in itself has to be viewed as a sign of weakness. So we do feel that the main trend is lower for the bonds. In fact, probably lower for the entire interest rate futures complex, especially in light of the strong probability that the Fed will be raising interest rates at the December 14th meeting. In fact, financial futures markets are now predicting there is almost a 100% chance of a rate increase of 25 basis points at that meeting. Also, our own work suggests that the Fed could be raising again next year. I would say probably in the second half of next year, I would look for another rate increase. So continue to trade the interest rate futures complex from the short side, and any additional pressure should be led by the 30-year bonds. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.